Ladies and gentlemen, good day and welcome to the Shilchar Technologies Q4 and FY25 earnings conference call hosted by Avendus Spark. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Swaminathan from Avendus Spark. Thank you, and over to you, sir.
Warm welcome to the Q4 FY25 earnings call of Shilchar Technologies. To take us through the results today, we have with us from the management Mr. Alay Shah, Managing Director, Mr. Ashish Shah, Executive Director, Mr. Atman Shah, Manager Operations, and Mr. Brajesh Purohit, the CFO. We will start with a brief opening remark on the business performance of the quarter and full year from Mr. Alay Shah, and then open the floor for Q&A. Thank you, and over to you, sir.
Hello everyone, and good evening. I am Alay Shah, Managing Director of Shilchar Technologies Limited. Thank you for joining us today. Before we open the floor for questions, I would like to provide a brief update on our performance for the quarter and the full year. I am pleased to report that both Q4 and year 25 have been exceptional for Shilchar Technologies, with strong results across all key metrics. Operationally, we achieved significant milestones, including the successful commissioning of capacity expansion in month of August and a subsequent ramp-up in production in the following quarter. Notably, we reached full capacity utilization in Q4, well ahead of our original target in year 26. As a result, we delivered our highest ever top line and bottom line performance, both on a quarterly and annual basis. This robust revenue growth has driven positive operating leverage while maintaining healthy gross margins, leading to a market improvement in our EBITDA and net profits. The transformer industry continues to benefit from several favorable trends. India's electricity consumption is rising and is projected to peak at 273 gigawatts in June 25. Investments in generation capacity across both renewable and conventional sources remain very strong, complemented by significant capital expenditure in power transmission and distribution sector. Sub-segments such as renewable, including solar and wind, are poised for continued growth, supported by the Government of India's ambitious plan of 500 gigawatt green energy roadmap for 2030. Given this demand trend, there is potential for further investment in our manufacturing capacity. While we have not yet finalized specifics, I want to assure you that Shilchar is fully prepared to capitalize on the emerging opportunities in the transformer sector. For the immediate future, our focus remains on optimizing existing operations and consolidating our recent gains. I would also like to address the recent update regarding reciprocal tariff by the new US administration. As of now, there are no reciprocal tariff on the export of transformer from India to US, and thus there is no immediate impact on Shilchar's exports. We will, however, closely monitor the situation as the 90-day tariff pause concludes, and will adapt our strategy should any change arise. Our outlook remains positive for both domestic and export markets. Though we expect the domestic business to experience higher growth in the coming financial year, accordingly, we anticipate a somewhat greater share of domestic revenue in the upcoming financial year. Finally, in recognition of this year's strong performance, the board has recommended a final dividend of rupees 12.5 per equity share, subject to shareholders' approval. Additionally, the board has approved the equity bonus issue, one new fully paid up equity share for every 2 shares held by eligible shareholders. In conclusion, we are optimistic about the future and remain committed to achieving our growth objectives while maintaining operational excellence. Thank you for your attention. I would now like to open the floor for your questions.
Thank you. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Abhi Jain from AJ Capital. Please go ahead.
Good evening, sir. Am I audible?
Yes, we can hear you.
Yeah. So a couple of questions, sir. One is, I discussed it last time on the phone call also. What are the plans on listing on NSE? Because last time you said that, in the fourth quarter of FY25, you would plan to do that, but since we are past that, so wanted to understand that.
Yeah, so that plan is, already, so for NSE listing, we need to have a minimum 10 crores of paid up capital, which we will be, eligible by giving this, bonus share. So once the bonus shares are issued, our authorized capital will be, 11.44 crores. And after that, we will be applying to NSE for the listing.
Okay. Fine. So second question was, obviously you've covered in your presentation and in your opening remarks also that the current situation with the US tariffs is moving, and it is, nobody can ascertain right now what will happen. But I just wanted to understand that internally, have you come up with a risk mitigation plan? Are you thinking of de-risking? Are you thinking of, reducing your reliance on US in terms of revenue? Because domestically, the demand that is there and all the other competitors of yours who are more focused on domestic market, I mean, the demand is there, and you might have also be seeing it and witnessing it. So there are a lot of options available in terms of de-risking from US. So just wanted to understand from your perspective, what are you doing?
Yeah, so I mean, we have, have our own strategy. Suppose after 90 days, if there are tariffs, levied off from export of transformers from India to US, I would not like to go much in detail, but I mean, we are very confident that our business will not be that much affected with those tariffs. I mean, we are very well placed in terms of our product, our quality, our service with our customers. And also the North American sales is only less than 20% of our total revenue. So rest is all other countries and domestic market. So there will not be any significant impact.
All right. Thank you, sir. Final question, sir. Given that the outlook on the industry is pretty strong and everyone in the industry is currently seeing, more demand than supply, and obviously you have also indicated something to the tune of same. And you have also indicated that as and when it is necessary, you will disclose to the shareholders in terms of your expansion plan. But I just wanted to understand that since you're already achieving your capacity utilization before time, what is the probabilistic capacity expansion that you're looking in the next 12 to 18 months? Currently, you are at 7,500. So how do you see it ramping up in the next 12 to 18 months? Just a glide path would be helpful.
So we have still not, finalized a concrete plan, but we are already working on the expansion, that how we would like to do it, till what capacity we want to do it, and, what is the maximum rating which we would like to have with this new capacity. Everything is going on in detail, and we are also working on the budgeting, what will be the cost, what will be the land area which will be requiring, all those things. Once everything gets finalized and once we are ready to, start the expansion project, we will definitely, come back to all our shareholders and give presentation with complete detail.
Thank you so much, sir. I like your candor and honesty. Just wanted to tell you that if we can have these phone calls every quarter, that would be helpful, rather than having it after 6 months or 6 months. Yeah. Thank you.
Sure, we'll keep in mind. Yeah. Thank you.
Thank you so much.
Thank you. A request to all participants, please restrict yourselves to 2 questions. If you have any more questions, you may rejoin the queue. The next question comes from the line of Ninad Sarpotdar from Aditya Birla Money. Please go ahead.
Hello. Am I audible? Hello.
Yes, can you speak a bit loudly?
Yes, sir. Is it better now?
Yes, good.
Yeah. So I wanted to ask the first question regarding the TAM, the addressable market. Like you discussed in previous con calls, for taking a hypothetical number, say for 1 gigawatt of solar energy, you need 1 gigawatt of transformation power. And am I correct? Is that the right ratio?
Yes, that is the right ratio.
Yeah. And your product is only installed at the generation point. Ideally, for transformation, it's at the generation point and as well as the end consumption point. So if you put up a 1 gigawatt solar energy per se, so you will need 2 gigawatts of transformation power. Is my understanding correct? So your time is half because your product is put at generation point. Just
No, I don't understand your question technically, what you are trying to say, but what I can explain you is that our transformers are used for generating, voltage, and they are stepping up the voltage from the solar panel, which are like 800 volts or 700 volts to 33 kV volts.
Correct.
And those 33 kV volts are fed into the grid. So against the 1 gigawatts of generation, the total capacity of transformer required is 1 gigawatts.
Okay, so that's for only stepping up the power, right?
Correct, yes.
And for stepping down also you need transformers, like on the opposite end, right?
Yes, but that is at the consumer level or at the substation level, distribution level or substation level.
So that's the product you don't, you are not into. Understood. And so second question that since now US is focused on more onto conventional power and they have shifted their focus from renewable development or growth, do you see any demand fluctuations from that market or how the export scenario looking for US?
No, right now the US market is very, very robust and there is a lot of demand in all segments. And we are not, specific to any one segment for our export business. So we cater to all kind of transformers.
Acha, okay. But your 60% sale is from inverted duty transformers, right?
That is for local business.
Acha, okay, got it. Yeah, that's all from my side. Thank you so much.
Yeah, thank you.
The next question comes from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead. Mahesh, please go ahead with your question. Since there's not quite. Please speak a little louder.
I'm audible now?
Yes.
Hi, sir. Thank you so much for the opportunity. Sir, I just want to understand the opportunity for us in terms of step-up transformer requirement in domestic market and export market. What kind of inquiry flows you are witnessing right now? If we have to look for next 12 to 18 months, what kind of opportunity is going to come on our way?
No, so demand is very strong in both domestic market as well as for export market, and we are flooded with inquiries, and we have at present a very good order position, orders on hand. So I don't see any downfall in the demand in coming near future.
In terms of, do you see a strong demand in domestic market, or is it both domestic and export side we are witnessing the same?
No, we are witnessing the same very strong demand in both domestic as well as in export market.
Yeah, because what we are currently witnessing is in the transmission side, there is huge demand for transformers across 400 kV. So when we look at the distribution transformer, is it the solar is the only driver, or is it some other capex that is coming up in distribution side that will drive the growth?
So locally, we don't supply any distribution transformer. We only supply locally the solar IDT transformers and wind transformers and some power transformers for stations.
Okay, sure. Thank you so much, sir.
Yeah.
Thank you. The next question comes from the line of Samyak Jain from Marcellus Investment Managers. Please go ahead.
Thank you for the opportunity. My first question is, so if I recall discussion in quarter two's con call, so you had mentioned that you will be finalizing the capex plans or expansion plans by Jan 25. So just wanted to understand if we have so strong demand visibility, why haven't what are the reasons that the plans are still under discussion stage? So just wanted to know your thoughts on that.
Sorry to interrupt, sir. You're not quite audible.
Hello.
Yes, sir. There's a little bit of disturbance at your end.
Actually, there is no disturbance here. I'll start once again. We are already working on, all the data and drawings and, what kind of capacity we want to increase, what will be the cost, what kind of land which we will be requiring for this, new capex. We are going bit slow because we are bit conservative. We want to make sure that any expansion we do has to be manageable and sustainable. And but the plan is already going on, and at the right moment we will make a formal announcement.
Got it. So just a follow-up. I believe once the plan is finalized, it will take a year's time for the capacity to go live. So do you foresee any loss of revenue or loss of orders due to any delay in finalizing the investment plans? Is there a chance of any loss on that front?
Well, I don't think so, because once the plant is ready, much before that we will be start marketing, for that particular plant and acquire the orders. So I don't think there will be any loss of any orders.
Understood. And a follow-up to a previous participant's question. So you mentioned that for your expansion plans, you are also considering going for a higher rating transformers. So does that mean that you are going for higher kVA transformer? So just wanted to understand a bit more about what's the plan on that front.
Yeah, so again, it is not finalized, but we are considering higher MVA and higher kV class of the transformer.
All right. Thank you so much.
Thank you. The next question comes from the line of Sunil Jain from Nirmal Bang Securities Private Limited. Please go ahead.
Yeah. Am I audible, sir?
Yes, audible.
Yeah. Just to confirm, once you decide on the expansion and start making this implementation, how much time it will take for first production to come? Hello?
Hello, sir. You're not quite audible.
Yeah, it will take anywhere between 12 months to 18 months to complete the project and start the production.
And since you have done recently expansion, so land is already there, or you need to acquire additional land?
No, we already have a land. We have a 17 acres of plot, and hardly 40% is utilized so far. So we have an ample land for further expansion.
Yeah, and said in other utilities like connectivity to grid and all will be available?
Yeah, that is already available.
Okay, fine. And this order book, can you quantify? Is it possible? How much is the order book or no?
So at present, I think our order book is close to 400 crores.
Okay, great, sir. Thank you very much.
Thank you. The next question comes from the line of Prolin Nandu from Edelweiss Public Alternatives. Please go ahead.
Yeah, Mr. Shah, thank you for taking my question. A couple of questions from my side. On the state of the industry, right, while you are thinking of capacity expansion, a lot of your peers have already announced capacity. And I was looking at, let's say, some of the top 10 players are expanding capacity in next 3 years by almost 50%, right? So do you see a condition in the market where there is an oversupply and there could be some pricing power? Could you help us understand, that why a lot of players are expanding capacity and you are also probably thinking of doing it. So I mean, is there a high probability of oversupply in the market in, let's say, next couple of years? And could that lead to some sort of a high competitive intensity and pricing erosion in the market?
So, I mean, we were ahead of all our competitors. We have already done our first expansion and started production in full swing. What we are talking right now is the second phase of expansion, where all our competitors are still, doing their first phase of expansion. Yes, everybody is expanding, so there will be, huge capacity coming in the market in next 2 to 3 years. But at the same time, the government data shows that, there will be a huge demand for the transformers also, because there will be a very huge demand for the power, and government is doing their best to, meet this, power demand. So, it's very difficult to say, but there will be a lot of production. There will be a lot of demand also.
Okay, understood, sir. So my second question is that one of your peers have gone for backward integration in terms of lamination of CRGO, right? So is it something we are also probably thinking to do? And if not, we are fine with our vendors who are doing it for us. Can you help us understand what could be when you will think about backward integration on this aspect, and is it critical to for you to probably move into higher kVA? Is this backward integration one of the important things that needs to be done?
So personally, I feel that this backward integration is not required at all, because there are enough suppliers of laminations, very close to our city, Vadodara. So, and we are able to we never face any shortage or any, supply problems of lamination from any of them. So personally, I feel that we should concentrate on our product transformer and not its raw material. I mean, every company have a model in-house, where our model is only to manufacture transformer and get everything from outside.
Understood. And can I ask one more question, sir, if that's okay with you?
Yeah, go ahead.
Yeah, so, sir, in the export market, right, where some of your transformers also go for the export market, and probably US is one of the key markets that you also highlighted, to the previous participant's question. Could you help us understand that in US market, what could be the share of transformers which are coming from, let's say, China? And because of these tariff issues, do you see an opportunity for some of the Indian players to probably gain market share in US?
Sorry to interrupt, sir. You're not audible at all.
Hello.
Yes, sir. Please go ahead now.
Yeah. So as far as US market is concerned, there are no Chinese transformers going into the US market, because there are tariffs on that product since last so many years. But there are other countries which are exporting transformers to US market. And of course, there are a lot of opportunities over there.
Okay, understood, sir. Thank you. That's it from my side.
Thank you. The next question comes from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Good evening, sir. Congratulations for good set of numbers. Sir, you mentioned about North America sales are less than 20% of revenue. I have seen the presentations. Could you please share the exports breakup for these 5 continents: America, Europe, Middle East, Africa, and Asia for FY25?
Yeah, so I don't understand your question.
Sir, for exports, we are supplying to 5 continents: America, Europe, Middle East, Africa, and Asia. And if you could share approximate exports breakup for these countries, for these continents.
I cannot give you, a precise number, but at least I can say that North America is about 20% of our total export, and the rest is around 80%, mainly Middle East and North Africa.
Got it, sir. Sir, on that capex front, I am looking at the historical data. It took first 18 years to achieve 1000 MVA to 4000 MVA, and from 4000 MVA to 7500 MVA, it took only 6-7 years. So based on the historical capex capacity expansion, so whether we can able to take another 3000 to 4000 additional MVA next 3-4 years? Is that right assumptions we can look at?
Yeah, there is a possibility.
Yeah, thank you, sir. That's it.
Thank you. The next question comes from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Yes, hello.
Yeah, congratulations, Alai. You've just done a fantastic job executing such a large number of transformers. Just wanted to understand how sustainable is this number 220 crores on a quarterly basis, or you think this number has been led up by in anticipation of tariffs to be raised and leading to higher orders in the last 15 days of the month. So I just wanted to understand how sustainable is a 220 crore revenue number going ahead.
So first of all, I mean, the tariff issue started only from first week of April, and we cannot, pull off numbers in anticipation of tariff in last year. So that is an assumption on your side. But I mean, if you look at our track record, I mean, since last 11 quarters, we have been performing, very consistently as far as our margins are concerned. And I am sure that we'll continue to do that. That will be our goal to, maintain this profitability or improve it.
Got it. So you've continued to surprise us with 28% margins. Now we have come up with 31%. So how should we look at this number going ahead? Should it continue to go higher, or this is the number that you will be looking as a sustainable run rate?
Are you talking about the profit revenue?
Yes, EBITDA margins.
Like I said, we will try our best to maintain this, or maybe even improve it. Why not?
Got it. And you'll be looking to double the capacity, or you'll be looking to announce it in a month or so?
Like I said, we are still working on it. At the right moment, we will, give you all the details.
And what is the aspiration that you're looking at? What kind of ambition you're looking at in terms of numbers to build in? How big do you think in terms of what kind of PAT targets you have? Maybe let's say reaching 500 crores PAT number, maybe by what year are you looking at?
So again, depends on the complete project viability. We are working on numbers, and once we finalize that, okay, this is the capacity which we want to increase, and this is the capex which we want to, incur for this increase in capacity, we will give you all the numbers. Then what will be the revenue from that, and what will be the PAT.
Sir, I was just
right
trying
now, it's very difficult to say.
Sir, I was just trying to understand one thing.
Arpit,
just one question. This is Amit Jaswani here. Just one question. Just trying to understand one thing, sir. That अपना कोई capex लगता नहीं अलग जी. So it's only 30 crores the last time we spent capex. Even if we double capacity, and assuming you go wrong, okay, you lose probably 1 quarter of profit. उससे ज़्यादा तो आपको loss होने वाला है नहीं. So why so conservative in capacity addition? Just trying to understand.
So like I said, I said this earlier also that any expansion has to be manageable and sustainable. Why are we doing the best EBITDA? Why our company is having the best EBITDA margin in the industry among all our peers? Right. So we are doing something which something extraordinary, which we would like to maintain it.
Right. So competition cannot come in basically that so easily in our products. Even if assuming there's a market out there, we are not, like, even though we are not increasing capacity very fast, we are not scared that some other competition will come and take our market away.
So we are increasing capacity fast. We did increase our capacity from 4,000 MVA to 7,500 MVA, and that was only in this year. So further expansion, we will be doing it, but again, like I said, we are working in detail with all the numbers, and we'll inform you at the right moment.
Got it, sir. Good luck, sir. Good luck. So nice speaking to you today.
Thank you.
Thank you. The next question comes from the line of Aman Soni from Invest Analytics Advisory LLP. Please go ahead.
Hello. Am I audible, sir?
Please be a little louder, Aman. Thank you.
Hello. Is it fine now?
Yes, I can hear you.
Yes. Good evening, sir. Congrats for a decent set of numbers. Just in continuation with earlier participants only, like you are saying demand is very decent, particularly in domestic market, and in your opening remarks you also mentioned exports are also having a decent demand. So my question is, like in this quarter we are operating at fuller utilization. So do you see for rest of the quarters, obviously for all the quarters in 26, are we going to maintain this kind of utilization levels?
Yes, that's the plan.
And is there any scope of... yes, please.
Yeah, so for this coming year 25-26, we are targeting around 750 crores in sales, in top line.
But in this quarter, we did around 230 CR revenue. So going by that, should not it be close to 950 CR full year?
So if you look at historically, the first quarter for transformer industry is always, a low sales, and then gradually every quarter the sales increases, and the Q4 is the maximum sales for all the companies for being a capital equipment. So same, if you consider the same scenario for this coming year, I think we should be able to comfortably reach to 750 or more.
Understood. 750 CR is just, I think, 20% kind of growth from our existing numbers, right? That's what you are targeting.
Sorry, I cannot hear you. I did not hear you.
That means 20% kind of growth we are targeting for next year, right?
Yeah, from 20-25%, yes.
Understood. Okay, sir, all of my questions are answered. Thank you very much, sir. Thank you.
Thank you.
The next question comes from the line of Ruchita Khadge from iWealth. Please go ahead.
Hello, sir. Very good evening. So, sir, first of all, I would like to understand on the export side of business. So, during this year, what is the kind of revenue that we've done on the export side? And what are the products, like where are we selling these transformers to? I understand it's not the solar inverter duty one. So, which other transformers are we selling there?
So, I think we have done an export of almost 44% of our total revenue this year. And we supply all kind of transformers. We export IDTs also for solar, and then we supply distribution transformers also. So, it's a complete mixed range of transformers which we export.
And sir, would the realizations be different in domestic versus export? Because I've been seeing some data point of your export, and it looks like on the export side of it, you make around 22 lakhs of realization versus domestic around 7 lakhs. So there's like a steep difference. So just want to understand, like, how different is the product?
No, so I mean, domestic we supply the higher rating of transformers like 10 MVA, 15 MVA, 20 MVA. That is our major sales. Therefore, export it is smaller ratings of transformers. So that is why you cannot compare the the price. Transformer is a big area and very big, and there are many different types and size and ratings of transformers. So you cannot generalize the costing based on this.
Understood. But just on per MV, I was just calculating, so I was just trying to understand like why the difference was there. But understood currently. And sir, on the margin side, right, we are doing better than the industry. Is it mainly because the export portion for us is higher than what the industry is doing, like around 10-20%?
Yes, so I have said this in past also that export gives us better revenue compared to domestic. But at the same time, we run this company very efficiently with very less expense, and that is how our margins are on higher side compared to our competitors.
Understood, sir. Thank you so much.
Thank you. The next question comes from the line of Shantanu Srivastav from SMIFS Limited. Please go ahead.
Hi. I think my name has been wrongly said. My name is Shantanu Basu. So the question that I have is, and I'm from Smith Limited. So the question that I have is, when I'm looking at your balance sheet, so basically I'm seeing a huge jump in receivables, disproportionate to the revenue increase. So can you please explain as to why this receivable position went up so high?
Can you please repeat the question? I could barely hear you.
Okay, can you hear me now, sir?
Yeah.
Okay, so I was saying that when I looked at your balance sheet, the FY25 trade receivables portion is very high compared to FY24. There has been very good growth in revenue, but the growth in receivables is disproportionate to that. Very high. So can you please explain as to why this happened?
Yeah, so there are 2-3 reasons. One is that when the revenue increases, you need more working capital. The majority of the sales which has come from last quarter, and we have the terms of LC with all our customer with 180 days payout. And we can encash this, LC if we need the funds. But we don't do it and we wait for 180 days to receive the fund, which we get it with interest. Because we have surplus fund, we don't, encash the LCs. So that is why the number looks bigger, but actually it is not an outstanding. We are earning interest out of that.
So, I mean, in a sense, has your receivable days increased compared to historical terms?
So like, with customer, I have a payment term of LC with payment term of 180 days, where 30 days the interest is to the, seller's account, but rest is with the buyer's account. So technically, I can encash the LC within 30 days and get my money. But I don't do that because we have surplus funds. So we wait till 180 days and get the interest and then receive the money. But on balance sheet, it looks as if receivable.
Okay. Okay. And how much percentage of receivables is that, which is LC backed?
I think the domestic market is almost entirely is against the LC.
Okay. So domestic you do against LC. Okay. Not the export.
Even export also with LC or with advance payment. I mean, there are various terms with various customers.
So on an aggregate, how much percentage would be LC back? Roughly, ballpark figure, sir?
Ballpark figure would be about 70-75%.
And is this your normal trend? Have you always
Sorry to interrupt,
continued?
Shantanu. Those were your two questions. I would request you to rejoin the queue. Thank you. The next question comes from the line of Jainam Vora from Saltoro Investment Advisors. Please go ahead.
Hello, am I audible?
Yes.
Yes, go ahead, please.
Yeah, congratulations on a great set of results. My question was similar to what Shantanu was asking. So I'll just ask my first question regarding that. So on an overall basis, how much of the trade receivables is LC backed is what I would want to know first, and then I'll ask my second question.
I think I already answered that. It's almost like 70-75% ballpark figure.
Okay. And with the share of domestic increasing, as you have said, continuing on the same question, with the domestic share increasing, do you see increase in this LC and trade receivables days increasing, as well as the margins kind of getting deflated because the share of domestic would increase? So what are a sustainable level of margins and receivable days that you are trying to look at? If you could share that, it would be great.
Like I said, this, receivable is not actually a receivable. I mean, I already explained earlier. So it doesn't matter. I mean, if we need money, we can get it any day. But our cash flow situation is very good, and we are totally a debt-free company. We have surplus fund. So we just, keep our LC with us, and on the due date after 180 days, we get the payment with interest, and that is another income for us.
So none of your receivables are more than a year. Is that a fair assumption? Or you have customers receivables are for more than a year?
No.
Okay. And what about the margins, given the fact that domestic share is going to continue to increase, given, as you said, the government trust and solar IDT and all that, as you've said, is that going to lead to a dip in margin? And given how the export situation is overall as well, as the deglobalization trend starts kicking in, what is Shilchar trying to do to continue to maintain those kind of margins and deal with the competition? Because I think in terms of competition as well, one of your competitors has announced a 15,000 MVA capacity increase, out of which about half of it is going to be for IDT transformers. So if you could provide some color about that, it would be great. Because your journey so far has been great, but coming into the future with so many variables at hand, and as you've said that you continue to do extraordinary things, if you could provide 2 to 3 years out, what are the things that you're going to do, it would be great.
So we are going to continue to be innovative, and we are going to continue to be efficient in managing the company and keeping our overheads low. Margin will remain as it is. Because we will be growing and our overheads will continue to be on lower side. So even if there is a price pressure, there will be a decent margin which we will be able to have.
So, but do you see price pressure actually happening?
Sorry to interrupt, Jainam. Those were your two questions. I would request you to rejoin the queue. Thank you. The next question comes from the line of Ashutosh Garud from Ambit Well PMS. Please go ahead.
Hello.
Yes, please go
ahead.
Please be a little loud, Ashutosh.
The kind of capacities which have, and given the fact that the demand outlook is so good domestically and internationally, and even you are confident from a margin perspective, you expecting just a 20% growth from a revenue terms for the next year, because wouldn't there be a case of much faster growth given the kind of scenario you just mentioned?
Yeah, so I mean 20%, 20-25% is a conservative figure which I am telling. And if you look at our track record, we have always beat the projection what we have shared, at the beginning of the year. So we'll do our best to even grow much more than what we have said.
Okay. And any particular reason why, from a tariff perspective, transformers are being exempted? Any particular reason for that?
Sorry, can you repeat the question, please?
Any particular reason why the transformers have been exempted from US tariff list, I'm saying?
I have no idea, but it's good for us, right?
No, absolutely. Yeah. So any thoughts around if at all that would happen in future? I mean, just wanted to get a sense around that, because although they are not included in the list, but will it be a case where you see that it could very well happen with the 10-20% tariffs coming in? That is what, from an industry sense, which I wanted to understand.
So frankly speaking, I don't think that will happen. I mean, we have been talking to all our customers and they are also very confident. But even if that happens, we have already worked out some strategy, which I cannot share it right now, but it won't affect our business or our exports.
Okay. Yeah. Thank you.
Thank you. The next question comes from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Hi, Alay. Thank you so much for the opportunity and congratulations on the good set of numbers to you and your entire team.
Thank you.
Just one question, Alay. Since last 2-3 quarters, we used to hear that the lead time in the transformer industry in the domestic market is around 1.5-2 years, and in the export market it was much higher. So how has that been trending out now going forward?
So I think the lead time still remains the same in the power transformer industry. But the advantage with us is that, again, I'm repeating same thing. We have been very efficient and very, on demand on the situation where we are able to, deliver our transformer with shorter lead time. And that gives us an advantage with our customers.
And likewise in the export markets also, it's a similar time tenure, or has it reduced now? Because of the zero material availability.
In export also, the lead time is, I think it has even gone longer. Because there is still a lot of demand in the export market as well.
Okay. Because I was just assuming, because the raw material availability has eased out, so has the lead time reduced with respect to the demand and more supply coming in?
Yeah, it's not a raw material availability. It's more of an order book, what you have. So if there is a backlog and then if you are having a constraint with the capacity, then the lead time also increases. So there are a lot of factors in the longer lead time.
Okay, got it. Thank you and good luck.
Thank you.
The next question comes from the line of Arya Singh from Atishay Stock Broking. Please go ahead.
Congratulations on the great set of numbers. Given that over 40% of your revenues come from exports, could you please elaborate on the rationale behind not hedging your forex exposure, especially considering the recent currency volatility? Was this a strategic decision, and how do you plan to manage potential margin impacts going forward?
I could barely hear you. Can you repeat the question? Can you speak a bit louder?
Sure. Congratulations on the great set of numbers, first of all. Given that over 40% of your revenues come from exports, could you please elaborate on the rationale behind not hedging your forex exposure, especially considering the recent currency volatility?
Yeah, because hedging is always a bit risky and we hardly import anything. So it is only an inflow of foreign currency for us. The outflow is very less. So we do not hedge. And if you see last 2-3 years of our record, we have always gained in foreign exchange currency. We have never lost money.
Okay. Also, what is the current order book?
It's between 350 to 400 crores.
Okay, thank you so much.
Thank you. The next question comes from the line of Harsh Mehta from Keyword Advisors. Please go ahead.
Hello, am I audible?
Yes.
Yeah, I just wanted to understand, in the presentation you mentioned that you have hit 100% capacity utilization, but later on we can see a slide where you have shown a calculation highlighting 77% capacity utilization. So if you could just, help us understand how the calculation is working there. And as you had mentioned previously, the realizations were around 10 lakh per MBA. So has that changed?
100% capacity utilization is only a run rate.
Sorry to interrupt, sir. Your voice is not quite clear.
I'm saying that the 100% capacity utilization is only for Q4 on a run rate basis. Since the capacity only came in online in August, for the full year it was not available, and for the full year the utilization is at 77%.
Okay, and for the realization part, you had previously mentioned it was 10 lakhs per MBA. So is that the same or has that changed?
I don't think we have mentioned that in presentation, but if you look at our last 2-3 years of record, we are maintaining pretty much in this ballpark figure.
Okay, and just one last question. So you had mentioned to one participant earlier that you are planning to expand into higher rating transformers. So approximately what kV class are you all planning to expand to?
Like I said, I'm to give.
Sir, we're not able to hear you.
Like I said earlier.
Sir, we're still not able to hear you. Ladies and gentlemen, I would request you to stay online while I get the management reconnected. Thank you. Ladies and gentlemen, we've got the management. Please go ahead, sir. Sir, please go ahead. The next question comes from the line of Raj from AlphaStreet Partners. Please go ahead.
Am I audible? Hello. I'm hearing my own voice. Hello.
Ladies and gentlemen, please stay online. There seems to be some technical issue. Thank you. Ladies and gentlemen, we've got the management. So please go ahead.
Hello, am I audible now?
Yes, I can hear you.
Yes, sir. Who are our exact peers and how are we exactly priced in? Like,
Sorry, can you repeat the question, please?
what I'm asking is who are our exact peers in this business and how are our products priced compared to our peers?
There are companies locally, they compete with. Hello.
So you are not clearly audible again.
There are many companies within India who are for renewable energy transformers. I mean, I can name few like Rechem, Danish Transformer, Transformer and Rectifier, and so on.
Okay. And sir, how are our products priced compared to them?
So we are competing with each other. So we have to be in line with everybody. I mean, no customer will give us very extraordinary premium because of our quality service. We get some premium, but it is like maybe 1%, 2%, 3% maximum.
Okay. And sir, if US imposes tariff on us, then do you expect competitive intensity to change or any change in the competition?
No, I don't think so.
All right. So this okay. So the situation will be same for everyone, right?
Yes, exactly.
Okay. Thank you.
Thank you. Ladies and gentlemen, in the interest of time, we will take that as the last question for today. I would now like to hand the conference over to the management for the closing comments.
Yeah, thank you everybody for joining. Like I said, we will be growing this year by more than 20-25%. We will try and fully utilize the capacity what we have created in last year during the entire year. And I think the demand is very good, the market is very good, and we are again very confident of having a excellent year 25-26. Thank you once again.
Thank you, sir. Ladies and gentlemen, on behalf of Avendus Spark, that concludes this conference. You may now disconnect your lines.